Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Palantir Technologies, ticker symbol PLTR. And here we are looking on the weekly time frame, having closed the week at a price of $26.04, being down a little over 1.5% on Friday and continuing down almost 1% in the after hours, but being up nearly 4.5% over the course of the week. And here we are looking pretty bullish if we are looking at the weekly time frame, having put in a higher close than any of these wick highs for the previous weeks. So that does suggest some strength. However, we did put in a pretty big wick for the week, hitting a high of $27.50. So it is quite possible this could be the beginning of marking the top. However, this does, look like a bull flag. So it is quite possible we could be breaking higher. But in order to really see a continuation to the upside, we will need to see next week's close above $27.50 because, we need to be putting in higher closes, getting in those closes at higher levels to suggest that there are still buyers up here. But right now, it does look like just about above $26. There aren't too many buyers up there. But I do think that we could be seeing further upside, but that is going to be based on the daily time frame. So I'll just be going over that over here, throwing up some drawings and retracements in just a second. But I did want to point out one thing that I find pretty interesting. It was actually pointed out to me on Twitter that we might be seeing an inverse head and shoulders pattern here, with the head being right here, a little shoulder here, a little shoulder here, and then a break above that neckline. So it is quite possible we could be seeing $28 or more in the coming weeks, but I do think that it might also be turning around. And so one reason why I think that is because if we do look at the chart, we have been putting in higher highs in the stock price. However, if we look at the RSI, we have been putting in lower highs, and that is bearish divergence. So it is quite possible 2750 could be the top, at least for the near term. But, it is also quite possible that if this inverse head and shoulders pattern does play out, we could be seeing $28 and higher. And with that, we could see the RSI tick higher than the previous highs, which was right around 80.57. So if we do start to see RSI on the daily time frame hit above 80.57, that could negate this bearish divergence and we could see price continuing higher. So do keep that in mind. But just looking at the drawings that I have put up here before and also adjusted a little bit for this week, we can see some levels that we've hit. I do have this purple line marked at $27, and that was really a target that I saw price coming to, also corresponding with some Fibonacci extensions like this 1618 from the yellow retracement here at a price of $27.53, just 3 cents shy of hitting that. But I do think that is pretty convincing. However, if you do note, we did not get any closes above $27. Here we did open at $27.01, but got rejected on March 7th. And then again on March 8th, on Friday, we did open above 27 at 27.19, but then closed well below, at 26.04. So I do think that 27 is a level to contend with and that we might be, as of right now, getting rejected from it. And I also do want to point out some of these levels that stood out to me, and I actually had an order placed at this 236 from this retracement at a price of $23.41. I was hoping it would get filled, expecting that price would be going up to around $27. But if you notice, the low on March 5th was $23.43. So I missed it by 2 cents, which is pretty disappointing, but I think that's good education in understanding and appreciating that these Fibonacci levels are all approximate. If I would have rounded that up to the nearest 5 cents, that order would have been filled. Or, if I considered these other Fibonacci levels, like this yellow one, the 382 was at a price of $23.53. And so that would have been filled. However, if you do note, the 1618 from that is 3 cents, like I said, above the high at 27.50. So then that would not have been filled. So I do think it is good to take these levels with a grain of salt and consider them, as approximate levels that should be taken rounding. And so 27 or 27.50 could have been, good levels to trim while we have pulled back. But I do think, like I said, it could continue higher. But if it does not, some levels that I think it might be pulling back to, one is the high that was here at 25.53. We have not yet really seen any closes above that level until, just recently on Wednesday when we broke above it. And so that is really, a break of that neckline of this inverse head and shoulders. So if we do pull back to 25.53, keep an eye on that because we could be testing that as a break of the neckline and confirming the breakout before continuing higher. And if we do take a measurement from the base of the head here up to the neckline, that represents about a $3.26 move. So if we do take that measurement from this neckline, that would suggest that price could be going up to around $28.82, almost $29. So that is quite the possibility for the next week or two that price could be heading up to that level. But I do think, as I had mentioned, that we have been putting in this bearish divergence that could be marking the top. So do be careful of that if we do break 28 and go a little bit higher. And also, one thing that I do want to note regarding this 2341, I did draw that retracement not up to the high here on February 12th, but to the high that was hit over here on March 1st at a price of 25.69. And so I probably should have just, disregarded this retracement or, taken into account the more recent one at 23.53. That would have been a better level for me to be buying at. But, as I do have this white dashed line marked here, I did expect price to be pulling back to that, testing that as support, but it did not. And instead, even if it would have pulled back to that level, we have been putting in higher lows. So I do think that suggests a lot of strength. But if we are to break those lows, levels to the downside that we might be testing right around $23 marked here by the 236, that could be a wick below the white uptrending dashed line and maybe close above it. So I do think that could be a good dip buying opportunity, but I do think that it would be bad if we started to see wicks below and especially closes below 22.29, which was the low that was hit here on February 21st. So do keep that in mind. But if we do break lower than that, $22 is another, psychological level to be paying attention to. And that is marked here based on this Fibonacci retracement that really extends up to the high over here. But that does also correspond with 2185 being right here. And that does correspond with the wick high that we saw on November 21st. But if we do start to see price at those levels, I do think we could start to see it falling to some of the levels that I had marked previously here. And I think ultimately we will be returning to right around $18 a share. But I do think that the rally could continue. And on that note, I'm just going to do another Fibonacci retracement to get an idea of some levels to the upside. I'm just going to take the retracement from the high here at 25.69, draw that down to the low that was hit here on March 5th at a price of 23.43. And now that I have those points adjusted, we can look at some levels to the upside. One to note is the 1618 is at a price of 27.09, and that is currently acting as resistance. So I do think it would be really good to see not just a close above $27, but to see multiple consecutive closes above 27.09, closing at higher levels than the previous day's high. which as of right now, the high that we need to be getting above is 27.50. So hopefully we can start to see that. And if we do, the next level up, the 2618, is at a price of 29.35, which is just above that measured move from the inverse head and shoulders. So I do think that there is still potential upside for Palantir to be crossing above 28, potentially crossing above 29, but I do think at some point it will be cooling off, pulling back to this uptrending level, this dashed line here. And so that could be right around $23.43, which was the low that was hit on March 5th, but it could also be coming back to some of these levels here marked on this Fibonacci retracement, and one of those being the 236 at a price of $23.96, or right around $24. I do think price will be returning to that level, potentially getting a bounce after it, potentially, pulling back to $24 before making an attempt at 28. So that could be, the next dip buying opportunity. But it may also not drop that low, as we do have the low here on the 6th being at a price of $24.53. And it does look like that corresponds with the 50% retracement here of $24.56. And so ideally, if we are to be putting in higher lows, perhaps the 618 at $24.83 or right around $25, maybe that is the next dip buying opportunity before rallying higher. But that could also be the start of a breakdown. So good to be cautious with that. But I do think, it's been incredible watching Palantir. I do hope it goes up to 28, if not higher. But I do look forward to waiting for a dip buying opportunity, perhaps in the next couple months, around $20, $18, somewhere around there, as I do think it is one to be accumulating long term. But for the short term, it just might be getting exhausted. But perhaps not just yet. Maybe there is another rally up to 28 or 29 in the coming weeks. So I do look forward to watching that and keeping you updated. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.